Okay, so thank you very much, everyone, for joining us for this panel discussion. So next, let's welcome Ambroise Fayolle. Ambroise is the Vice President of the European Investment Bank. And very importantly, he is a very close buddy of mine, and it's so great to be with you, Ambroise. Thank you so much for doing this. I really appreciate this.
I thank you.
I know Ambroise from the World Bank, where I was treasurer and vice president. And Ambroise, I had the privilege of working with him, and he was the executive director of both the World Bank and the IMF. And France, which is where Ambroise, his country, France is the only country that has the executive director of both Bretton Woods organizations. That's the organizations IMF, World Bank were created in the Bretton Woods after World War II. It's the only country that has the same executive director, which makes sense because it coordinates both on the development side and on the financial side. So in our panel this morning, we discussed market tools to help transition to a decarbonized economy. And so now we're going to switch gears, and we're going to focus more on the macro picture. So Ambroise, can we start by your telling us what is the European Investment Bank and what does it do?
Well, first, let me thank you a lot, Madelyn, for this opportunity. It's not often that European Investment Bank is mentioned in American universities, so thanks a lot for that and for your friendship. The European Investment Bank, EIB, is a public institution that was created in 1957, what we call the Rome Treaty, like the European Commission. And it's an institution that is the financial arm of the European Union. So basically, we finance projects that are of interest for the European policymakers. And our balance sheet is we are a big institution. So 600 billion euros is the size of our balance sheet. We finance every year between 60 and 70 billion euros, mostly within Europe, but also between 15 and 20% outside of Europe. And the target historically was we were more on the public side of investment, but we are now very much in the private side. And historically we have financed a lot of infrastructure projects, but we have moved also in the field of innovation, of environment, and of the support to SMEs. We are based in Luxembourg. We are around 3,000 to 4,000 people. We are a bank of engineers, so we love to appraise projects. And we are active everywhere in Europe. We borrow to lend, so we don't get money from the budgets of the member states. We have mandates with the European Commission so that we can blend money that we borrow in the markets to make the conditions better for the borrowers. But basically we borrow, and we borrow every year around 60 billion euros in various currencies. Much more now in green bonds. We were the first institution to issue a green bond in 2007. And before the World Bank, I say that because the World Bank said the contrary.
I was going to say, well, there's some controversy about that. So we've decided, because the World Bank always said that we were the first, and EIB said, no, we were the first, and now we've agreed to say we simultaneously were the first.
Yeah, we simultaneously, but I think history is on our side.
We were faster.
And we are rated AAA. So what it means basically is we can borrow very cheap and very long. And since we are a public institution, our goal is not to maximize profit, and we make these conditions benefit to the projects we finance. So in a nutshell, this is what we do.
Yeah, thank you. So, so it's interesting because a lot of people in the multilateral development space, the MDVs as we call it, they're confused because a lot of people think that EIB is a development bank. So can you differentiate the two? I think you touched on one in terms of the capital, but...
Well, actually, we are a member of the MDB community.
I know. Technically, I understand.
So technically, we are a combination of investment and development bank. The thing is, we are the only development bank whose activity is in large part in advanced economies, where we finance projects that have a huge interest for the policymakers. And we'll speak about climate, but climate clearly is the one now. But also, you know, what we have in Europe as difficulties these days is that, unlike in the US, the venture capital, the private equity markets are not so developed. And there is not a problem of liquidity, there is a problem of capacity of investors to take risks. So we help there as well. We have helped thanks to a plan that probably you have not heard of, which was called the Juncker Plan, to invest in much riskier projects. And because this is our role, what we call to crowding in private investors, private or public actually, so that we never finance, for example, more than 50% of a project. So we need to have other partners come to help finance the other half of the project. And we don't want to take the place of the private sector. We are not there for that. What we want is to be there for projects where there is an added value of a public institution, be it for its innovation content, be it for the big size of a project, for example, a big offshore wind park that requires also our contribution, or a big, rail track that is built, etc. So this is our DNA, and we have also a part of that is really in developing countries. We do every year between 8 and 10 billion euros outside of Europe, and half of that is in Africa. So it's really big. Actually, we are pretty close to Africa, and historically we have been very close to what we call the neighborhood. So from Ukraine to Morocco, including what we call the accession countries that have the potential to join tomorrow the European Union, the last one being Ukraine. But the sub-Saharan Africa is also a key continent for us.
Thank you. So you mentioned the Juncker Plan. Can you tell us about the Juncker Plan?
So Jean-Claude Juncker is the former president of the European Commission. Just now it is Ursula von der Leyen, but Juncker was there before, and he was previously the Prime Minister of Luxembourg. We are headquarters in Luxembourg. And what Juncker wanted is that we give a push to risky investment, because after the last financial crisis, in 2012, what we have seen in Europe is that our main competitors here in the US, in Asia, investment was coming back, and especially risky investment, and not in Europe. There are plenty of reasons to explain that, but we wanted to give a boost to that. And to give a boost to this kind of investment, what we have got from the Commission is a guarantee for 60 billion euros, so that we could make a lot of projects. Thanks to this guarantee, we would be investing our money ourselves with the guarantee of the European Union, because we are rated AAA and we are, quasi-supervised. We need to make sure that the money is well invested. With the guarantee of the European Union, we were able to invest much more in riskier projects. We have invested altogether, ourselves and the partners who have helped us, close to 300 billion euros. And that was so successful that it was extended to actually 100 billion guarantee from the European Commission to finance 500 billion euros of projects in Europe. And what we have financed is in particular innovation. So we have taken a big role in medtech, for example, activity in Europe. If I can give you an example, when I was in charge of innovation before, there was a very interesting company that a biotech, a German biotech, that came to us and said, okay, we are in the business of cancer, and we have developed a technology that is very interesting, which is called the mRNA. I had no idea about what it was. I still have difficulties to understand how it works. But we have a team of engineers and physicians, and they understood pretty well. And they were very excited about that. So we financed them for their research on cancer treatments with the first loan of 100 million euros. And then in 2020, when COVID surged, they came to see the team and they said, you know, we think our system, our process works for COVID. And we decided that, okay, let's go. We have the money from the Juncker plan, let's go. And this biotech is called BioNTech. And BioNTech has associated with Pfizer to produce one of the most successful vaccines on COVID that has existed. And I can tell you, we would not be where we are now, speaking freely, almost with much less COVID, if there had not been this kind of vaccines and this kind of investment. So we are very proud to have developed this project.
That's great. I didn't realize that you were involved with that. That's great. I knew about the Juncker plan, and that you were actually, EIB was more the vehicle to implement the Juncker plan. So thank you for that. So let's transition into the European Green New Deal. So Europe, of course, European Union in particular, is at the forefront of global efforts on transitioning into a green and carbonless economy. So as is very evident by the Green New Deal. So can we first talk about the New Deal? Can you explain it? What are the key components and so on?
So Europe has a big ambition, and the ambition is to be, in 2050, the first continent to be climate neutral. And that has big implications, because we are obviously emitting way too much today to go there. So what we need is to reduce significantly the level of greenhouse gas emissions, to increase significantly the level of investments that we have, so that we can reach this climate neutrality by 2050. This is a goal that is shared everywhere in Europe. Interestingly, not only in Western Europe, but when you talk to countries in Eastern Europe, they also are very, very much interested by that. And it translates into strategies that the European Commission has put in place. This is reflected in what we call the EU taxonomy. This is reflected in strategies that the most known is called Fit for 55. Fit for 55 means a reduction by 55% of the emissions by 2030. So it is really something very ambitious, but we are absolutely convinced that it is needed. We see already more and more the damages of climate change that is already there. And so we need to act very, very quickly to increase the investments in the area of climate mitigation. And unfortunately, we need to deal much more with adaptation. So
you mentioned the taxonomy. In the ESG reporting space, taxonomy gets a lot of discussion, a lot of attention. It's extremely complex. I guess the document's like this big. But what I like about it is the EU has done a really great job, in my opinion, of holding everybody accountable, companies as well as asset managers, because we all hear about so-called greenwashing. Well, frankly, asset managers do probably more these days on greenwashing than companies, because they realize how many asset owners, the investors of that money, the owners of the money, want to invest in green products. And so, lots and lots of ETFs and mutual funds are even changing their name to just put ESG in there, they can get higher fees. So what I love about the taxonomy is that's going to prevent that. And in fact, it's already had an effect in Europe. So at a very high level, because it's very complex, Can you talk a little bit about the taxonomy and sort of how it fits in and how it will help drive the whole Green New Deal? And so what's the purpose, what's the intent?
So the purpose, Madelyn, is to avoid the risk that you spoke about. And the risk is that investors doubt that their investments are really green. And this is a big risk because we need private sector investments to reach the targets. We know that. We are a big bank, we are a public bank. We will never have the magnitude of investments that is needed to reach the climate neutrality. And if you need the private sector investments, what you need is to be sure that they consider that there is a common language, that they have no doubt that because I say this wall is green, which is not, this is a green investment. So that's the basis of the taxonomy. And it is true that it is very complex. It is not finished. But it is very complex. The first part has been already adopted by the Europeans. And it has two big elements. I mean, there are three categories, actually. There is a category that is rather easy, which is green investment. These are investments that have, what we call a substantial contribution to reaching the green objectives. That's pretty easy. You have investments that are obviously not green. When you invest in coal, you don't invest in something green. And for investors, that's easy. So the green bonds are for the first category. The bonds that are going to lead to stranded assets are in the third category. And in the second category, in the middle, you have the most difficult part, which is bonds that, assets or projects that are not green, but that are not bad for climate. Let me give you one example. My health project is not green, but it is in line with the Paris Agreement of 2015. It is in line with the objectives to get to a life where you don't invest in projects that are not conducive to a better life and a greener life. For these projects, what you need to do is to make sure that the projects do not significantly harm the climate objectives. That's what we do. That's what we call the do not significant harm. And if we have that, then these are projects that we can finance, even if they are not completely green. And when we finance a project, this is where it becomes a bit tricky, where we finance, for example, a project of a wind farm. We need to make sure that, okay, a wind farm is green, but we need to make sure that it is not harming significantly other objectives of the taxonomy. For example, biodiversity is also a very important component. If you put a wind park in a place where you have rare species of birds that are really going to be endangered, then you cannot do this investment. So this is the complexity of it. And even myself, I'm often lost with it. But I think the objective, if you want a broad picture, the key objective is simple, to make sure that everybody speaks the same language so that the investors which are needed to finance these projects know what is green, what is not green but acceptable, what is not acceptable.
Thank you. Yeah, it is pretty complicated. And of course, in addition, there's also that meeting the minimum safeguards, right, which I like. It's so inclusive. And in fact, on the panel that we were just talking, about the offsets, I think so it's a still relatively new market, and now there are these over-the-counter trading indices, which is just, in its infancy. but I think there'll be a lot of adaptation of that because of, the very first of all of these so-called thresholds for the EU, the taxonomy is climate mitigation. And so long as you have something that's, a mitigating asset, that of course doesn't hurt one of the other criterias, and if it could be properly measurable and have proper standards that are high quality, then I think that could really be very powerful. Yeah.
Yes, indeed, and that's something that we at the bank have developed a lot. This kind of measurement. I mean, there is a lot of work. This is one part where the multilateral development banks try to move together. The same with Paris alignment. We have decided in 2021 that we would finance projects only if they are Paris aligned. We have decided that in 2022, because you can have a great project, green, but promoted by a company that is not Paris aligned, that is not great. An oil company, for example. So what do you do for that? What do you do for a project that is, we thought about that a lot last year. What do you, when you have an oil company saying, okay, we would like EIB to finance a project of charging station for electric cars in Europe. So what do you do? And actually, there were two, not camps, but two visions inside the bank. One vision was to say, okay, sorry, but we must promote projects that are supported by companies that are Paris aligned. This is not the case of oil companies, so we cannot do that. And there were another vision that actually I was close to, that said, yes, it is true, but at the same time, we know that, for example, oil companies, they are in absolute need to change their business model, to invest a lot in innovation. They have the ability, they have the teams to do that. We can learn from that. And even more, we know something for sure. If there is not enough innovation, so things that we are not even aware that it's going to be good for climate tomorrow as investments, we will not reach the targets. And for that, companies like the oil companies, they can help. So what we have decided is that we would continue to work with these companies in case they have very innovative projects on carbon capture, on green hydrogen, for example. These are things where we work a lot, that they can bring expertise, they can bring the skills, they can bring their huge pockets, so that we can move together towards a greener economy. But this is not easy.
Yeah, I would guess that you get a lot of pushback on that. So, so let's switch to what's happening on the ground in Europe, that tragic war in Ukraine. What's the possible impact of the war on the European path towards sustainability?
Well, let me start by telling you something different. There is a war in Europe, and this is the first time since World War II.
Correct.
This is the first time since EIB was created following the war in Europe. And this is really a tragedy, this Russian invasion of Ukraine. We are active in Ukraine. We have been active in Ukraine since independence, actually, of Ukraine. And we continue to be active in Ukraine. Now, I would say that there are two kinds of consequences of Ukraine for Europe. The first one is, and obviously we need to show solidarity and action, and we do that. But we have also not only invested in Ukraine recently, we have also invested a lot in neighboring countries of Ukraine where you had a lot of refugees, often women with children because the men are at war. And so these countries need our support. And you have the second thing that that has had as an impact of this crisis, of this war, is it has translated very quickly into a food and energy crisis. And to be frank, sometimes you can think it is very interesting to be a minister in Western Europe or elsewhere. This year it has been very difficult, because Europe was very dependent on gas for the supply, on Russia for the supply of gas. Some countries were very, very dependent, like Germany. Some countries, like France, were much less dependent. But anyway, we are in the same union. And of course, that has triggered a lot of research for how do we prepare for the next winter? How do we make sure that our industry is going to continue to work? And how do we avoid, to your question, the setback? That people say, okay, we had COVID, so during COVID, climate will come later. Let's have the economy back on track and we'll see later. With the crisis in Russia, you could say, okay, let's have the crisis over. We'll come back to climate when we have secured our gas supply. And actually, what I think we have avoided is the two elements. That no, we have not said that, yes, COVID, of course, has been a major source of investment, but we have not forgotten our climate targets. And of course, resolving the energy crisis is also a big element, but we have not forgotten the climate needs. And actually, what we have, together with the European Commission in place, is an initiative to not only set back, but to speed up investment on climate, because it is good for climate and it is good for energy independence. So we really believe that it is the time to speed up our investments on green.
That's good to know, because over here we hear that, well, with the whole energy crisis, the high prices, maybe there's going to be sort of a pushback. And of course, in the U.S. we're not exactly as progressive, putting it mildly, as Europe. So people kind of use that as an excuse. But that's good to hear that you're standing firm and continuing to move forward. So in EIB's Climate Bank roadmap, you've got these targets set to mobilize at least 1 trillion euros by 2030. And of course, that's only 8 years away. So firstly, can you describe this roadmap? What exactly is it?
Yeah, the roadmap is a decision that our board, so the board is members of the 27 member states of the European Union, has embarked on in 2020. And there are 3 objectives. One is to put the share of what we finance as climate or environment from a minimum of 25% to a minimum of 50% by 2025. The second element is to mobilize with our investments other investors, institutions, banks, etc., to finance 1 trillion of projects in the green in the critical decade 2130, which is really the one that we cannot miss if we want to reach the climate targets. And that's what I'm referring to in the trillion of investment. So it means 100 billion a year. We have more or less a leverage factor of 1, 2, 3, or 4. If we finance half of our business of 70 billion per year, so we finance around 35 billion euros of investments. in green, you put 3 times the 35 billion, you have the 100 billion every year, and over the decade it puts you to a trillion. That's more or less the way it is for various investments in renewable energy, in energy efficiency of housing, of public buildings, in innovation, in adaptation. So all this is very important. And the last part of the Climate Bank roadmap is the part related to 2 elements that are essential to me. One is we only finance projects that are Paris aligned. And the other one, which is what we call the just transition. And the just transition is a concept to say, if we want the transition to be successful, we need to make sure that no one is left behind. This is true outside Europe. This is also true in Europe. The bank roadmap was interestingly approved unanimously by our board, which means that you have a lot of countries in Eastern Europe who have a much longer way to go to climate neutrality than countries like the Netherlands or even Spain. But they were okay. And the reason why they have agreed is that we told them, okay, you will need more support to get there, and you will get this support. That's what we call the just transition. It's also a concept that we see outside of Europe, for example, in what we call the Just Energy Transition Plan. The first country to benefit from that is South Africa. What do you do in a country like South Africa to move from coal to renewable? This is very tricky. And it's not only tricky because you need to find the good projects for renewable. They exist. It's tricky because you need to make sure that what do you do with the workers? What do you do with the people who are active miners? So that is something that you need to work on, what we call, reskilling, make sure that they will have a chance and opportunity to find a new place in this environment where, well, there is no more coal, but there is going to be more projects where they can play a role in their family too in this life. So that's the concept of just transition. To me, there will not be a success in the climate change if the transition is not just, because the population will not be on board.
Absolutely, there has to be, you have to think about, they're being displaced and what else are we going to do to retrain and, absolutely. So can you describe are there key projects that are of interest, or is it across all of these priorities and so-called thresholds of the EU, or how does it work?
Yeah, actually, we finance many.
Can you describe some of the projects?
So, well, let me tell you one example to show also the evolution of the investment of EIB, and we do that because we are a public bank. And again, we are not here to crowd out private investors, at the contrary. So 20 years ago in Europe, we were financing a lot of onshore wind farm. That was new, that was not very well developed. Today, not at all. I mean, there are a few cases where we may have a role to play, but normally you don't need the EIB to finance these projects. 10 years ago, off the coast of Denmark, there were a lot of projects on offshore wind parks. They were much more complex. We had a big role to play. Today, we continue to be part of some of the projects, especially because these are huge projects. It's projects where investment is easily in 500 million euros or dollars at the same these days to 1 billion, if not more. But I would say that there are a lot of investors investing in this kind of projects. What we do now is to invest a lot in what we call floating offshore. And the floating offshore is technically much more complicated because you are much more off the coast, and you need to find ways to bring the electricity back to the shore. And for that, of course, with complexity comes risk, and with risk comes, well, the public bank can help. And that's what we have developed off the coast of Portugal or in the Mediterranean Sea. And there is a huge potential for that also because in some countries in Europe, wind farms are not very much popular. You know, the famous concept of not in my backyard, basically.
Same,
yeah?
same here. I have a home in Long Island, same thing.
And so, of course, the more you are far away from the coast, the easier it is accepted. But technically, it is much more complicated. So this is the kind of project that we do. We are very active in all renewable energy. We are very active in the concept of how can we. I'll give you an example. In northern France, we have the houses from mining workers. There is no mine anymore, but there are houses, and these actually are historic houses. But they are terrible in terms of energy efficiency. The problem is you cannot restore them from the outside because outside is protected by their historic status. So what we have done with actually we have financed a project with another public institution in France to renovate completely from the inside and also to renovate the way these houses are structured. You know, they were done 100 years ago. You don't live the same way as 100 years ago. And so this was really, really interesting to see. It has costed more than if you had just renovated from the outside. But then you keep the historic value. And for people in northern France, especially in the mining community, this is something that is very, very, very important. And I think it was quite successful to the extent that I saw people who were really thanking, not me, thanking Europe for having renovated their house, which is something interesting because this is also part of France where, and elsewhere as well, you need to show that Europe is there not only with regulation, not only with constraints, etc., but also there to finance projects that will improve the life, the daily life of European citizens. That's also how we see our mandate.
That's fantastic. You know, that also brings it right down to the really personal level, not just, well, I'm helping you sort of from a macro level, but that's really wonderful. Okay, so thank you. So now, so you talked about the trillion, you talked about how much, you know, the investment projects and so on. So can you tell us about the mechanisms and the instruments that EIB uses to crowd in the private sector?
So what we are a public bank active in various ways. So basically, the only thing we cannot do is to take direct equity. That we cannot. Our shareholders don't want that. But what we do is quasi-equity. So we have, for example, in venture debt, we have developed a lot, thanks to the Juncker Plan, projects that are continued. And this is quasi-equity, so this has the flavor of equity. This can be accounted by companies as equity. This is not true equity, and it is self-liquidating investments. But for the companies, they see that as a real added value. The added value is that they can count that as equity. And the other added value is because we are not interested in becoming shareholder, we are not interested in taking shares. There is no dilution of the capital. We are not interested necessarily in being at the board of these companies to take over, etc. So that's also something that's for, you know, when you have created your own company, this is something you are very sensitive to. What we are also active, of course, is loans, just basic loans. To give you, we don't have any network. You are not going to see any agency of EIB in the streets anywhere in Europe or in the world. So, because we are not that developed in countries, what we do is we finance banks under good conditions for these banks to finance the projects we want to finance, consistent with the EU priorities. For example, SMEs. We finance the big banks, and the objective is that with the money that we give to these big banks, the banks will do ×2 in terms of financing of SMEs. That's the kind of projects we do. If you want to add one level of complexity to that, what we do now is when we assess these projects, we are not only asking the banks to do ×2 in terms of financing of SMEs, which is good for their balance sheet, after all. We ask them, okay, can you include part of the capital that will be dedicated to this, 20%, 30%, to the greening of the SMEs? And we now systematically look at the ways to make sure that when we do a project, we look at, is there something that can be in the mitigation business, or is it something that can be in the adaptation business? There were terrible floodings in Europe last year. We have financed the reconstruction that is linked to that, but actually the floodings that were once a century, they are now at best one in a decade. So you need to change the way you do projects in infrastructure when you do this. And that's also part of our job. And we do also guarantees. So what we can do is, and that was the Young Complex was a good example of that, and there are other examples now, what we can do is first loss pieces, so that we take the first loss when there is, and that is very, very good to bring investors. If I can give one example, agriculture. There is a big problem in Europe to finance young farmers. I'm not sure it's only in Europe, actually. But what we have done then is a combination of things. The Ministry of Agriculture of the country has given us the first loss piece, 60 million euros. So when there is a problem, that's the first one to be tapped. We have given a guarantee to the banks. Guarantee is covering, figures are not accurate, but the magnitude is that 80% of each loan until 16 or 20% of the total size of the portfolio. And then we've come to the banks and we've told them, okay, with these conditions, what can you do? And what we have seen is tremendous interest from the banks. Of course, you have a first loss piece, you have a guarantee. What they have done is actually conditions financially that farmers, young farmers, had not seen for decades. 1 billion with this 60 million first loss piece, 1 billion of new loans. And for the farmers, what was very important, no request for collateral. Because normally when you do a loan, the bank requests that you have the farm as a collateral. And that's when you start in life as a farmer, it's really tough. We managed to get that, no, actually, with these securities, that we can avoid that. This is the kind of project that we love to develop.
That's really scaling up a lot. So can you go back? You said that so you don't lend directly to companies, large or small, but then where does the bank?
No.
So you lend.
We do actually. We do both. So we are a big bank. So when there is a big project, or when there is a very innovative project with a small firm. So for example, the research and development of Airbus, we have financed that. The greening of the research and development, we are financing that today. Or other suppliers, etc. What we have developed with the Juncker Plan is super innovative projects for companies that have developed. They are not startup anymore, but they are in one of the desert valley that where they burn a lot of capital and they don't have necessarily the resources. So that we help. The kind of Beyond Tech, for example. But we don't finance normally SMEs. directly.
Oh, so, because I always thought
So-
you did go directly. So you
Yes.
do the directly for the big
Exactly.
companies,
Exactly.
big projects? Okay, got it. Yeah, that makes sense. Okay, and can I ask you a different question? So as you know, at the World Bank, we have sort of World Bank, not exactly concessional, because IDA is concessional, but World Bank is still not market levels. So do you lend, what kind of rates? So more like IFC, so how does that all work?
Yeah, actually, it's a bit different. So, like the World Bank, we borrow on the markets to lend. Like the World Bank, we are AAA. So we have an advantage because we borrow cheap. And actually, the steeper the yield curve, the bigger the advantage. So we were not that competitive in the recent years because of the flattening and the fact that with all the support that was given from the central banks, the level of yields were very low. Now, with the central bank starting to stop the monetary support, and you see the short-term interest rates rise, you see the yield curve also rise. So that's something where we are going to see, like actually other MDBs, an advantage. What we don't have, and that the World Bank has IDA. And IDA is budget money to support projects in particular in very poor countries. So we don't have that, but what we have is for when we work in very, very, very poor countries, what we work is to implement mandates from the European Commission with specific targets. And that we do, and that helps us to implement projects. We have a few projects with other, but other like for example, Allianz or. But the bulk of our activity is with the European Commission. So this is the European, what we call Team Europe.
I like that, Team Europe. So one other question on this, and then I want to switch to COP27 in a minute. So what is the EIB doing to foster the emergence of a sustainable financial sector? How are you sort of encouraging that?
Well, actually, we are encouraging that by our policies, by the fact that we have implemented standards that are quite of high level. That we are very active in the green bonds. This year, around 40% of what we finance is through green bonds. So it's really getting better and better, and we include more things in what we can finance with green bonds. For example, we have actually we don't call that green bonds in our vocabulary. It is called climate awareness bonds. That's the way they were defined in 2007, and we have also sustainable awareness bonds for environment. So climate awareness bonds is for mitigation, and the sustainable awareness bonds are more for environment. We have, since the beginning of the year, including in this, for example, projects related to biodiversity. They can be financed by our green bonds. This was not the case before. And there is, and actually we are working, that's going to be for next year, to assess the biodiversity impact when we assess the economic impact of our projects. So these kind of things, we are making a lot of progress. And finally, of course, this is very much a risk approach, climate. Climate is a risk. And what you see in most of the banks, most of the financial institutions, we are not particular to that, is what we call the greening of the financial sector, and we are very active there to make sure that that what we do is the right thing, and not only the right thing, but that we are not going to be stuck in 20 years with stranded assets which we cannot get rid of.
Thank you. So we have an online question.
Yeah, we have a question from an online viewer. asking, for NYU's newspaper, the Washington Square News, is there anything that you could share for NYU students who are interested in the Green New Deal and global economies, and what students can do in their early careers to help contribute to the rise of more green companies?
Now, that's a great question.
I mean, this is a fundamental question, and but I must say that that's what makes me optimistic. To have this kind of question, to have the strong interest from the younger generation on what can we do to make things green. And I think there are many things you can do. There are many things you can do in your daily life. There are many things you can do in pushing for companies to move in investing in green. And I can tell you, corporates are very sensitive to the opinion that people have, especially the young one, on the green. And you see that green has become actually an asset. And of course, if you want to do that as a job, I mean, there are now plenty of opportunities to develop sustainable work in companies, in banks, in insurance companies. I mean, this is going to be the future. That's also what makes me, en passant, optimistic also that yes, there are negative consequences for people who are going to lose their job with this transition, but we'll win a lot of new jobs with this transition as well.
Yep. You know, offline, I would love to be able to engage with the paper, and we can maybe write a co-author an article, and then sort of, you know, spread the word. Especially what I find really great about this opportunity is because, you know, in New York, in the university, in the U.S. in general, we're sort of a little bit U.S.-centric the way we think, and so bringing the European perspective and the Green New Deal is really great. So we have one other question, because we only have a few more minutes, and I have an important question that I would like to ask Ambroise as well.
Thank you.
Before we wrap up.
Okay, so when you're considering investing in these various projects, how do you underwrite them? So what are you using as a price of carbon? What are you expecting for the overall, what is the rate of increase that you're expected for the price of carbon over time, right? Because these are 5, 10, 15-year investments.
Yes, it's a very important question. And I will give you a very concrete example. And we asked ourselves actually the question when we designed the Climate Bank roadmap, should we get out of financing roads? We have decided, for example, that we would not finance any more new airports, because we think it's not consistent with the objectives of climate neutrality. But roads, it was not that clear actually. And maybe on airports we will come back to that when there are sustainable fuels, things like that may change the same way electric cars are changing the approach on roads. And we have decided, I mean, some of the NGOs were clearly saying, yes, you should get out of this business and concentrate on other things. What we have decided is not to say no, but to say we are going to continue to invest in roads, but when we appraise the project, we appraise that not only from an economic standpoint and financial, of course, but also social and environmental. We will apply internally a shadow price of carbon. And this shadow price of carbon will evolve over time so that it is consistent with our assessment and the studies, and this is something we review regularly because it changes with time passing by. Consistent with climate neutrality by 2050, which is the European target. So to give you an example, today, but it may be different in 2 years or with the new data that we are going to get. The price of carbon, the ton, is today 80 euros per ton in our own internal assessment. And it will go up to 800 euros per ton by 2050. And it was 30 euros per ton 2 years ago. So that means we assess that and that impact of the price of carbon in the way we are going to say yes or no to projects, and there are clearly projects that we are not going to finance anymore, and there are projects that we will continue to finance.
Thank you, Ambroise. So before we wrap up, can you tell us your perspectives on COP27 and what EIB brings to the table, and what are you hoping to accomplish?
Well, it is, COP27 comes at a very difficult time. If I may say so, because I was yesterday at an event on nature. So is for what we call COP15, which is the COP on biodiversity and nature that is going to take place in Montreal in December. Both are coming at times that are really, really challenging. The Egyptians, the COP27 will be in Egypt. Egyptians have an approach that I think is the good one, which is to say, we don't want, again, new commitments, and we'll see if you deliver on your commitments. We want this to be a COP of implementation. So you need to come and show us what you do concretely to implement the promises that you have already made. And I think this is the right thing to do. That's going to be a very interesting COP. For obvious reasons, it's going to be a difficult one because it comes at times of energy crisis and the food crisis. But we will bring our own perspective from EIB. We have also our projects that we are going to present. We work on, for example, an environment framework close to or next to the climate framework that we have. And we work also a lot with our friends and peers of multilateral development banks to bring also something together, because we want to show that we are together on the same boat, even if institutions have different strategies and different targets themselves.
Okay. Well, thank you very much. So thank you so much, Ambroise. Great to see you, and thank you for spending the time with us. It's been really very enlightening and very wonderful speaking with you.
It was a pleasure to be here, and thanks a lot, Madelyn.
Thank you. Thank you very much, everybody.